Thank you everyone for joining us. My name is Dan Reed with SCORE Maine. If you're unfamiliar with SCORE, SCORE is a resource partner of the Small Business Administration, where we provide one-on-one mentoring, where we have folks who volunteer their time, just like Larry, who's going to present to us today, to sit down with you and talk about your business. And they give back to the community by helping entrepreneurs in giving back that perspective. And we also do workshops just like this one, where we have experts in the field, like Larry, who's a SCORE mentor, come in and talk a little bit about the thing that they're an expert in, and provide a little bit of entrepreneurial education. And with that, we also get community support from organizations like the Maine Technology Institute, who's a huge supporter of SCORE and a sponsor of this webinar. So I do want to say thank you to the Maine Technology Institute, and thank you to Larry. And I'm going to pass it over to Larry for him to do a little bit more of an introduction and get us started today.
Well, thank you, Dan, and welcome everyone. Hopefully, you'll find this presentation very informative. Uh, my name is Larry LaPlante. I'm a retired certified public accountant. I had experience with small business clients. I prepared tax returns, financial statements, and so forth for those clients while I was in public accounting. For over 20 years, I was the controller, then CFO for a small investor-owned electric utility in Maine. And then in my last bit of my career, I was a director of finance for a community college in Maine. But I also taught at various colleges in Maine. I taught accounting and financial management classes and so forth. So I have a pretty broad background in some of the issues that small business folks have to encounter over. So I have an appreciation for some of the challenges that you are facing. I live in Hamden, Maine. If you're not familiar with Maine, it's the town where Stephen King taught school before he practiced his other vocation. And if you know Stephen King, he's been a prolific writer over many years. So in my view, best practices, things that we'll be talking about, increase the likelihood of survival. Some of these things may make a lot of sense, but people tend to forget that they should do certain things. One of the things I strongly suggest to my score clients is to build a team. I know when one starts a business, you're always focused on what do I need for equipment, what do I need for supplies and things of that nature. So you're looking at your capital investment. One of the things I suggest to my clients, and I suggest to you this today, is that you need a team of advisors to help you. Based on my experiences, if something isn't done correctly, for example, good review of a contract that you're entering into by an attorney, doing some tax planning, with your tax advisor, making sure that you understand what the payroll tax rules and regulations are. That when something goes awry and it always a lot more expensive, correct that problem than if you did it properly at the beginning. And when something has to be corrected, let's say, for example, you miss payroll tax deposits or sales tax payments and things of that nature, well, they're also subject to fines and penalties. So if it's not set up properly or you're aware of these things that you have to be focused on, it becomes very, very expensive later on. So I building a team, develop and hire trusted and qualified employees and indoor contractors as you see fit. Um, Actually, I need to back up a slide. Okay. Build a team. Invest in professionals, because in my opinion, good advice leads to good results. Again, a tax advisor to help with tax work and preparation of financial statements, an attorney for the various organizational filings, review of contracts and agreements, leases, and things of that nature, and insurance agents to help you identify the types of coverages you need to cover property and casualty, some general liability, you know, your vehicle's workers' comp, and so forth. So having that team in place hopefully will eliminate issues in the future. Uh, Build a team. And this really is focused internally. Develop and hire trusted employees and qualified contractors. Sometimes, you know, the classic case is someone needs someone to do their accounting work internally. Well, you probably, because you don't have the workload to hire a full-time accountant, you may have to look outside the organization for someone who can provide those services. But you need to make sure that you can trust the individual and they're qualified to do the work. And so you have to do your due diligence, if you will, to make sure that they're competent. Uh, Develop specific job responsibilities. Um, in this day and age, if you hire someone, you should be very specific as to what your expectations are. And so there's no, well, we're going to play it by ear and see how things go. Well, you can do that, but you have to have some general, like, give them some general responsibilities to so they understand what their job requirements are. Ascertain their education and work experience. So, for example, if you were putting in a online marketing program, you wouldn't hire necessarily someone who had no experience in that area. So again, does this person have the capability? Do they have the skill set? What are their experiences in doing something comparable to the work that you want them done? And so, because you can't do it all, you have to delegate responsibilities, but you have to supervise those people. So you have to establish, if you will, controls so that you can review their work, understand what they're doing, but give them the parameters that they need to in order to do their work. Keep business activities separate from personal activities, and this is a common problem for a lot of businesses starting up. And people have a tendency, well, I'll write a check out on my personal checkbook to cover this business expense. Not a good practice. So you should keep separate checkbook for business and personal, separate credit cards. So if it's a business expense, you pay it from the using the business credit card and so forth. So keep those separate. And if you have to, for example, make a if the business is a little short of cash and you quote unquote make a loan from your personal account, then document it as well. You can do that, but document it. So uh, if it's a loan, make sure that you document. So loans to businesses from the owners or from the business to the owners, because it could be both, you should have applicable term. Should have an interest rate, and the interest rates are prescribed by the Treasury Department and also by the IRS. You can find out what the rates are, and they're usually, my recollection is the information that there's rates for different terms. You should have a due date, and if there are payments terms, you should have that in the loan document. So it would have someone looking at a payment. One could determine, is this in fact, a loan repayment or what have you? Okay. And why is that critical? Well, in circumstances, and I've seen this when clients got audited, and there was a payment to the owner, let's say, and it was hard to determine whether it was, say, for example, compensation, i.e., wages, was it a dividend from the business to the owner, or was it in fact a loan payment? So unless you have the documentation to say this, this is, compensation, this is a loan payment, it's difficult to go back later on and say, oh, well, we meant that to be a loan. Well, if you have the documents in place, it's not as easy to reclassify that if the agent wants to do that. So I think it's important that you document uh, the relationship between the owner and his business or her business. Establish workable accounting and reporting systems, and this is critical. Um, I always advise my clients is when they're looking at setting up their accounting system slash reporting system, that their attention should be to things that they need. What financial information do they need to make a decision? Okay. I think sometimes, and I'll criticize my own profession. Sometimes, the accounting system people will set it up based on a flow that may coincide with the line items on a tax return. Well, that doesn't necessarily mean it's worthwhile to the client, right? You're looking at, if you're selling products and so on and so forth, you have to know how much I'm selling of a particular product. Well, you don't get that unless, the system should help you get to that information. So, for example, I just talked about sales and revenues, you know, by customer, by products, etc. Track spending. And one of the critical areas there is what expenses do you need to have a handle on in order to make your decisions that you need to make. And one of the first analysis that should be done is what's a what's a fixed expense, what's a variable expense. Classic example. If you have let's say you're a retail business, right? Well, obviously you're going to have inventory on hand. And the inventory on hand is based on the sales activity of particular products. Okay. Well, if you look at, if I have something on the shelf, okay, I'm only going to replenish that if I was able to sell other products in that line. So the activity for that particular expense item, if you will, varies with a level of sales activity. If it's your manufacturing operation, it's going to vary with the level of production. Whereas a fixed expense is, for example, if you're leasing a building and the monthly rent is the same month after month after month, that's a fixed cost. Okay. It does not change regardless of the sales activity for the business. And so once one understands what their fixed expenses are, I mean, those are the expenses if I do nothing as far as sales activity. These are the costs I have to, pay every month or every year, what have you. And one of the things that I think once someone gets into start in looking at the types of activities that impact their expenses and so forth, it's always important to say, am I doing too much? Am I analyzing too much? Because you can have analysis paralysis because you're tracking too many things. So you have to really focus on what are the elements that make the most sense so I can track the financial capability of my organization. Again, establishing a workable accounting system. One of the issues that has does crop up is knowing what the deadlines are for certain things. I mentioned payroll tax before. There are payroll tax rules that one has to adhere to, and it's based on the liability limits. Okay, in other words, if you have employees and you're withholding Social Security and federal income tax and so on and so forth, you have to make payments, you know, in accordance to how much liability you have. And this was a classic situation that would crop up from time to time. Let's say, for example, uh, someone had paid payroll uh, every 2 weeks. Well, if you do that, there are going to be 2 months out of the year in which you have three pay periods. And sometimes people would get so, you know, comfortable, if you will, making deposits on a two pay period liability amount that they lost the fact that, oh, 1 month I got an extra pay period. And so they would sometimes not deposit the correct amount within the prescribed time periods, and then they would get hit with fines and penalties. So knowing, you know, those rules and so forth, at least being aware of that, should eliminate extra penalties and interest and so forth. Uh, Payroll taxes, sales taxes, again, depending on the liability for the particular state. If they're due, the states have a prescribed time period in which to make those payments. Obviously, loan payments, if you are required to pay, to make a monthly loan for any borrowings you have, well, they're usually prescribed time periods in which you should make the loan, or you're going to face late payment penalties. The reason I say that, I mean, those are expenses, and in some cases, they may not be tax deductible expenses. I always, suggested to clients that they have, a tickler system, as we call, something that, has a reminder that comes up, whether it be a calendar or maybe in some cases paper documents to remind you that something has to be done within a certain time period. So those are all important because, I can tell you over the years, I mean, there are times that, I say, oh, I got to remember to do something. But if you have that reminder, it certainly kind of triggers that action on your behalf. Invest in accounting software. A lot of people adopt QuickBooks, and I think that's a good platform. There are others, okay, and so that provides you know the business with a means of tracking their financial activity. Uh, Again, with these packages, you do have to have a little bit of insight as to how you want to structure some of your reporting. Okay, so it does help to sit down if you're not familiar with a platform such as QuickBooks, and maybe sit down with your accountant and just, structure it so that you're capturing the right information. And I find that people who aren't familiar with typical financial statement structures have a little bit of a difficult time trying to contend with some of the things that QuickBooks require. QuickBooks is a valuable tool, and there are others out there. But again, you have to have a little planning, if you will, to set those structures up so you can adhere to that. Now, if you don't want to, invest in a system, if you understand any spreadsheet program like Excel, you can do something comparable. I've had some small business clients through SCORE that I've set up worksheets that they can use, captures the information. It's not as robust, if you will, as a QuickBook type system, but they can, track the activity in their checkbook, track sales by different classifications, and the same with expenses. So it's very easy to work with, but you do have to have a little bit of an understanding about Excel or the spreadsheet program. Manage cash flows, and I think this is critical. Cash flow is always an important uh, thing for small businesses. No one ever has enough cash. I mean, that's whether it's business, personal, what have you. But survival is important to a business if you have to have cash, sufficient cash during critical times in order to, prosper as a small business. So you have to understand what your spending cycles are. You know, and I use a classic example of, for example, if you're retail and you do a lot of business during the Christmas holiday season, so you have to say, okay, if I'm retail and I'm going to be selling these goods from say mid-November through Christmas, when do I have to order those things, pay for that merchandise, and have it on the shelf? Well, there's a lead time there, okay? And so if you order it a month before the start of your uh, sales cycle, then you're going to have resources to pay for those items. So you have to understand in your business where are the periods of time in which I'm going to be spending more money than I'm taking in. Okay. And so you have to plan accordingly. We'll talk a little bit about that in a minute. Know your customer payment habits. If you're extending credit to customers, okay, and you're offering terms, let's say you're giving them a discount if they pay, let's say within 10 days. Well, or you say you need to pay within 30 days. Well, there are customers out there, and you may be maybe doing the same thing with the vendors that you buy materials from. You're going to go right up to the end date. And oh, by the way, the check's in the mail. Okay. So even though you're anticipating a payment by day 30, it may not get to your, may not receive it until day 34. And oh, by the way, you got to make that deposit and it's not going to be cleared by the bank until day 36. Well, you have to factor that into your cash flow analysis. Okay. So just be aware of that. But it's important to have an idea, especially if you're in business and you have had, developed relationships with customers, that how are they, are they timely pay or can I expect a little bit of leeway there for them? Focus on critical cash expenditures. Again, going back to my example of, you know, uh, ordering inventory for a holiday season rush. When will I need to pay those vendors? Okay. So that's all part of knowing how your cash flow responds. Anticipate cash shortfalls and develop a plan. So having said we have these periods of time where our cash flows, we're going to need more cash than what we're receiving. So therefore there's a gap there. How are we going to have the resources available, the cash available to pay those purchases? And so, there are a couple of different ways of doing it. If you have cash in the business, if you've planned accordingly and you have reserves, cash reserves, well, that's a source. But sometimes you have to go and secure short-term funding through a working capital loan or something with your local bank or financial institution. Well, you have to realize that applying for those does take time. You can't walk in and see your loan officer on day one and expecting to have everything approved by day two. So you have to factor that in. And if you're projecting that you're going to have one of these situations where your cash expenditures are going to exceed your cash receipts, and or can project how long that's going to last, and you know how much you need, then you can kind of develop a plan and apply for that type of working capital. Fully understanding that at some point in time, the reverse is going to be, once you have the sale during the holiday season and you generate the cash and so on and so forth, that's when you're going to pay back your loan. But it does take time to set up that working capital loan. Okay, especially if you don't have, and usually most institutions will probably give it to you for a length of time. But again, it's going to be probably requirement that you provide financial information and so forth on how the business is doing. And oh, by the way, it's almost an annual application process. But the point is making sure you provide enough time in your planning to get a loan and or renew a loan. Okay, to continuously evaluate and plan. So to me, this is part of the best practices. So up to this point, we've talked about things, kind of ongoing things, handling funds, planning for cash flow, and so forth, which are all critical. But part of it is, as for your business, you're always trying to think about ways to improve the business, and it's continuous. It doesn't stop when you do your first business plan and bring it to the bank or try to uh, secure a grant or something of that nature. It is ongoing. So you have the first template, but you should always continue with that planning process. So and part of that is you always need to ask the tough question. How are we doing? And if you're a single person owner and um, it's hard to ask yourself that question, I realize that. But you also have to have a pretty good understanding of what some of these parties, some of your customers and so forth think about your business, the types of products and services that you provide. So one of the things that you could do, and again, having a team of advisors is also helpful because if you have a good relationship with them, you can ask them, what are you hearing about, in the general public about my business? And hopefully they're honest with you to say, well, you know, the people I talk to, you can improve this or that. So again, having that good team of advisors can help you. If you're a single person owner of a business, they can help you a little bit by providing some insight about their reaction or the reactions they're seeing from your local area. So when we talk about the strategic and again in evaluation, you need to have an idea of the business climate in in the industry that you're in and also in the operating area. And a lot of times, you know, uh, folks will be receiving, they might be, you might be a member of a trade group, or you might be, involved in the local chamber of commerce, what have you. And, with trade magazines and with, some of this interaction, you have a pretty good idea of, you know, what's going on in the business. Do we anticipate that we're going to have a lot of more activity? Our products and services are going to be in high demand or not? And then in the operating area, what's the economic climate in the area? And so being aware of these things and trying to just be on top of that does make a difference because, do I expand? Do I, adjust my activity according to what the sentiment is in the industry and in the operating area? What are the strengths and weaknesses of your business in meeting the challenges and or opportunities of your industry and or the operating area? Every business, can say, I do this very well. And if you get that feedback from a number of parties, again, I mentioned your advisors, some frank conversations with them, some frank conversations with some of your customers, some frank, conversations with people who in the area that, again, if you're in a small area and your product, you're well known to the community, you can get some feedback from them. And then the other, again, that's part of it. And what activities or things I need to focus on to strengthen my business? What is the business not doing well? So to change your focus to say, is this, it's a weakness, but it can be an opportunity. And that's always critical. And I think every organization, no matter how, what their size is, that's a continuous assessment. So customers and markets, understanding who your customers are. I understand, you have a sales to XYZ company, but do you know the people at XYZ company? Do you know, some of the people that are decision makers in that company and so forth? So going over and beyond, just a customer name and so forth, I think is important. So that way you can have a conversation with the the major decision makers for that customer. Are they happy with your products and services? Okay? Because in some cases, you build those relationships. And sometimes when it comes down to it's not always price, okay? But if they like your product, and and you have maybe some leeway with them if you have a relationship with that customer. They know you, you know them, and you can work with them. What new products and services can be sold to current customers? Again, going back to this strength and weakness assessment. Sometimes, you know, a weakness may be you don't offer all the products or services that a particular group of customers want. Well, what can we do to provide those quote unquote products and services to them? Maybe they're buying it from someone else. How can we acquire, you know, these these customers if we can produce the products and services they want or they require? Who are potential new customers for existing and or new products and services. Again, it's an evaluation of, the business landscape that you're in, the various customers that are seeking your types of products and services. You may have called on the particular customer in the past and nothing came of it. And again, in a lot of situations, there's been change in personnel at their place of business as well as your place of business. Well, it doesn't hurt to reestablish a connection with those customers to see if there's something that you're currently producing or selling that they want, and what other products and services would they consider buying from you. And it could be things that you're contemplating doing for your current customers. So therefore, you have another potential source of sales. So those are the things that have to take a little bit of work. It takes some personal interactions in some cases to meet with existing customers and new customers to get an idea of what their needs and what their expectations are. And in the case of current customers, are they happy with your products? Are they happy with the quality of your products and so forth? Market strategies to retain existing customers or obtain new customers. And really, in some cases, that comes down to price with some of these customers. So if there is a lot of competition in your particular uh, segment of the business, what types of things can we do that would attract and retain customers? And it can be, is it, are they expecting discounts? Are they expecting volume discounts? Those are the types of things you have to strategize about. And uh, sometimes it does make a difference if it's usually a pricing concern on your customer's part. How creative can we be to attract their sale, because you're looking at sales volumes and things of that nature, and to keep the customer happy. And hopefully quality is an important factor as well. But a lot of times it comes down to, if the quality is the same, what kind of pricing structures can we provide to customers or potential new customers to keep them or attract them to our products and services. An operating financial plan. You know, Part of this planning process is, especially if you're in a situation that you've identified new products and services that could be attractive to new customers or existing customers. So what do you have to plan for to in order to either produce or purchase these new products and services to customers? So I think a lot of the planning and uh, opportunities come especially if you're manufacturing products. Okay, do you need new equipment? Do you have the right labor or skill sets for your employees in place, and things of that nature? So it takes a little bit more time and a little bit more planning to make sure that you have the capability of making these products and services. One thing to say I can do this. The second, but you still have to do it. You have to show that you can do it. So personnel and or contractors with the skill sets to deliver the products and services. Again, do we have people on board that has the skills, or do we hire these new people that have the skills, or are there outside contractors that can come in and on a temporary basis do that? Or in some cases, is it something that this outside firm can produce it and then we'll remarket their products? There's all kinds of opportunities there, but one has to strategize about which is the best option for the company. Suppliers. If it's a product that requires raw materials or parts or whatever that you're not currently using, and you might have to secure from another party that you're not familiar with. You need to kind of do your due diligence on them, make sure that's the right product that you need to produce or to sell to your customers. Okay. So it requires some advanced planning and some due diligence on your part. The equipment investment, especially in a production process. What equipment do we need that we don't currently have, you know, to do, produce the new product? So that's an investment. Again, go through. Does it does you know will it does it have the capability to produce the product with the spec that are expected by the customers and so forth? That's critical. And how are we going to deliver these new products and services to customers? Again, depends on the size, depends on factors of, if it's, something that you're going to be sending by, UPS, FedEx, or whatever, what are the shipping costs going to be? So those all have to be factored in because ultimately, in effect, it affects the pricing and the profitability of the product. Okay. Financial plans to provide the resources. As I mentioned before, there's, especially if you're in a production environment, when you're looking at investing in equipment and things of that nature, and even if you're producing products, you have to be looking at what type of resources does the organization need. So again, it comes back to projecting cash flows. Where are the critical time elements and the critical cash needs at different phases of the production process, if you will, or for the purchase of items for resale. So you have to do as long part of the operating plan. How are we going to produce or provide these goods and services? We also have to look at when will we be spending money, and how are we going to have sufficient funds on hand to meet these spending needs? So you have to have, again, a plan, that anticipates, the cash flow requirements. That includes, when are you going to be paying your personnel, especially if you're adding significant numbers of folks to the payroll, the contractors, if you end up using those folks, and vendors for supplies and materials. So it requires the development and retention of lending relationships to assure cash credit lines are available and appropriate for the borrowing and leasing arrangements that that you're exploring. And sometimes, depending on the size of your project and the relationship with your financial or lending institutions, they may be able to accommodate you, or they may you may need to look at other options. And so you should always be aware of and don't anticipate that you can walk into your current lending institution and say, this is what we want to do, when, you know, provide me with a loan. Well, that may not be the case, or it may mean because of the level of requirement that you end up having to, get into a situation where we'll talk about, maybe it requires an SBA loan, and it's because of the size of the commitment and so on and so forth. The 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 lending institution is not comfortable and they want to have another, an SBA type organization participate with them. So those are the types of things that you have to kind of understand that's part of your planning process. And so that's part of the work that has to be done along with these other things. So, but and what you don't want to do is come down to the very last minute and say, oh, I got to go find an institution, because in order to get things approved, the funding in place and so forth, there's a time element there. So sometimes these things have to be done in parallel. I think the last thing I would recommend and when you're developing, looking at the continuous business plan, and I think sometimes it doesn't get looked at enough, is to be thinking about business continuity. And if it's especially with a single owner situation, what's the strategy for the owner to retire and so forth, the so-called exit strategy. Unfortunately, life happens and sometimes the single owner, for whatever reason, has health issues and or passes away. So if you look at the business entity as a separate entity, even though the business owner is a key element of that business entity, the business entity is there. It's a separate, a separate thing, if you will, and so it has to hopefully continue to bring value to the owner or owners uh, representatives going forward. So it's always important to identify key personnel in the organization. And if these key personnel are critical to the continuing operations of the business. As businesses grow, and if you've provided them with responsibilities and so forth, it'll be readily identifiable who those key people are. So, for example, if you have a person in an organization that does a lot of the day-to-day operating activity, that's a key person. Or if you have someone who does the financial, that's a key person. So you need to identify those things because they're hopefully in order for the business to survive going forward, those are key people that should be involved in the day-to-day activities of the business. Determine retention strategies for these key people. Okay, how do we keep them working for the organization rather than look for another opportunity elsewhere? So if they're key people, there are things that you can do to retain them or try to retain them in the organization. Maybe you offer partial ownership, things of that nature. So there's lots of strategies that one can explore with their advisors. Like, again, that team of advisors, they would be key folks in developing a strategy for these key people. I think the other thing is if it's especially if it's single owner or a business that has maybe two or three owners, it's you really need to know what their plans are. When are they thinking about retiring, or when do they think they may want to sell the business? Because I mean that's critical because you need to identify who might be potential buyers of the business. If it's someone within the company that has shows an interest, well, you need to be exploring uh, those opportunities over a period of time. You can't say I'm going to retire tomorrow and expect things to move smoothly. So those are elements that I mean at least should be talked about and considered over a period of time, and develop strategies regarding departure of the owner and key employee. Okay, talked about that before. So if the owner says I want to retire in 6 months, what do you need in place to make sure the business continues? Because the business is a viable entity. The ownership of the business can change, but at some point in time, if it's a viable, ongoing enterprise, it will continue. It's just a matter of defining, identifying the future leaders of the business. So I think, and again, this is an area I think that doesn't get looked at a lot, and I think there are a lot of businesses that end up you know, uh, the key players are no longer there, and eventually they just kind of, if you will, die because there's nobody that can continue with the business. Eventually, someone will say, well, we're either going to sell what we have or close the doors or what have you. But if one has put a lot of work and so forth in the business, hopefully it's going to continue. And I think it's an opportunity to let that business thrive and the people that made that business grow would continue to work for the business, earn their livelihoods and things of that nature. So that's all that I have. Are there any questions? I don't, Dan, If anyone has any questions, I
Yeah, we
think we're
don't have
pretty
any
much
in the
on.
chat at the moment, but if anyone does have any questions, please feel free. You can also unmute yourself if you'd like to just talk as well. Or if you're more comfortable using the chat, I will read your question off to Larry. I know it's just as someone who's a small business owner myself, Larry, and it can sometimes be very hard to do the work of working on your business rather than working in your business. So with that said, and knowing how important it is to get these documents together and have some kind of plan I can keep coming back to, how would you recommend possibly doing that, like time blocking, or how would you recommend kind of making sure that we're setting aside enough time to make sure we're doing this correctly?
Sometimes, in Dan, it's because I agree, you're so busy doing the day-to-day stuff, trying to get the work done you need to get done. It's sometimes difficult. I started a small CPA practice with a gentleman, and we had one of our key employees was sort of our office manager. And the times that we would talk and strategize sometimes was over lunch. So we would, you know, again, take time during the day and go and have lunch or something. And that's when we used to exchange ideas. Okay. That's one way of doing it. So you have to, you- first of all, you have to realize I need to do it and then try to figure out what's the best way of doing that. Okay. And like you said, Dan, when you're quote unquote the person, it's hard to do that unless you have someone, that is aware of what you're trying to accomplish and you can kind of brainstorm ideas with, okay? And uh, it doesn't hurt to at least be aware of that and try to the extent you can set some time off. It doesn't have to be once a week, but set some time off to do that for a half hour. It doesn't have to be in the work environment. It could be done, like I said, over lunch, over dinner, whatever. So,
Yeah.
for larger organizations that want to go through a strategic planning process, there are those professionals that will facilitate those activities. Okay. And basically, their role in it is to try to spur conversation. What I'm saying, usually it's a much larger organization. Okay. But usually they have the experience to kind of go through and do the strengths and weaknesses analysis with the input being provided by the folks that are in the room on behalf of the entity. Okay, on behalf of the business. Okay, so but if you use this kind of basic framework and think about again, what do we do right? What are we doing right, and what could we improve on? You know, I mean that can lead to some hopefully some good results going forward.
Do we have any questions? If anyone like to unmute and ask? All right. Well, thank you very much, Larry, for presenting to us. I know I definitely need to work a little bit more on that last one and trying to make sure I have everything up to date and all together and not just working in my business, so to speak. So thank you for sharing your experience with us today. And if you would
Okay.
like have a mentoring session with Larry or a SCORE mentor like Larry, please feel free to go to score.org and click find a mentor, and we will get a mentor registered with you. I will send out a slide deck for this as well as the recording afterwards and Larry's email if he's okay with that. And if you have any questions,
Yes.
you can reach out to him. Thank you so much, everyone. I hope you have a good day.
Okay. Thanks.
Thanks, Larry.
How did it go, you think?
Oh, good. Yeah.
Okay, good. Thanks.
Bye.